Hi, everybody. I'm excited to welcome everyone here. It's a great occasion. It's kind of a celebration, but it's also a kind of ask us anything session for anyone looking at Azure printed homes. So I'm going to introduce myself and our guests, and then we'll get going. So I'm Cheryl Connor. I'm a 30 plus year senior executive and entrepreneur with two exits under my belt. And that follows the public relations agency I've been leading for 19 years as founder and CEO, Snapp Connor PR. As a thought leader, I've served as a national columnist for Inc., Entrepreneur, and most time for Forbes, 6 plus years as an entrepreneurial writer. My current agency is most notable for managing high stakes and high power businesses, with our primary clients being select organizations that are truly changing the world. And speaking of those clients, one of our favorite clients, who's also become a very good friend, is Gene Eidelman, Azure Printed Homes. And in full disclosure, I'm also honored to be one of the company's investors. Gene, I'm going to introduce you a little bit. I hope I won't embarrass you, but CEO and co-founder of Azure. Gene is not a typical US CEO, as he came to the US some decades ago at age 16, speaking no English and rising up through hard work to get an American education, earning an MBA from Pepperdine University, who this year awarded him the Winds of Change Award for his work with Azure Printed Homes. Also, they named Azure one of the 2025 most fundable companies. And Gene has directed multiple companies in education and manufacturing to successful exit. Of these, Azure holds a particularly strong place in his heart for its importance in advancing the concept of home, which is also the topic of his TEDx presentation that's been named by LA Business Magazine as one of the 30 most important talks to inform the next decade. So he has led Azure through inception, inspired by finding a solution to the damage created through the earlier LA fires, but that's helped put the company in an ideal position to lead out in the recovery from the 2025 fires. And then through the expansion through the US and internationally, which he'll be telling us some more about in today's update.
Cool. Thank
So,
you so much. This is the nicest introduction I've ever got. So,
well, then that's good. So I'm going to keep going. So, Dr. Markel, hi, I'm sorry, Matt. Matt has excelled in leadership, engineering, and technology and product development in both the defense and commercial sectors. He is the author of Antipreneur on wealth building for professionals and leaders, and particularly for those from within organizations or who are not traditional entrepreneurs, as well as the author of Radar for fully autonomous driving. He is the CEO of Spartan Radar Inc. for automotive and commercial vehicles markets. He created and led the team for Ghost Autonomy, autonomous driving company, and led the radar team at Waymo. Prior to this, he was principal engineer fellow on the space and airborne radar staff at Raytheon, an engineer on a number of projects for the U.S. Air Force Research Lab at Eglin Air Force Base, and is the inventor of multiple patents and trade secrets during his time at Raytheon and Waymo, and multiple patents pending from his work at Ghost Autonomy and Spartan Radar. Did I miss anything?
I think that's plenty right there. Thank you so much, Cheryl.
Thank you. And then Jimmy Ralph, who has more than 30 years experience in raising capital, leading companies, mergers, acquisitions, negotiations, turnarounds, and startups. Jimmy has had 3 exits, most recently as the founder and CEO of Talkmore Wireless, America's leading Metro by T-Mobile retailer, with more than 200 locations in 18 states. Currently, he's CEO of the Board of Advisors, the nation's premier invitation-only mastermind for elite entrepreneurs, investors, and business leaders, and is heading up BA's continuing evolution and expansion in the US and beyond. Welcome, Jimmy.
Thank you, Cheryl. Thank you for that great introduction. And hey, Matt. Hey, Gene. Good to see you all too, as always.
Same here.
Great to see you
What we'd
all.
like to cover today is just everything about Azure that not as a promotion, although obviously we're enthusiastic, but more the kind of things we would tell our best friends. If they were considering a wise investment, what would be the things they'd want to know? What were the things that inspired each of us? And on that front, I'm going to let Jean open it up to give us a little bit of an intro for anyone new who's joining, but also an update for what's been happening most recently at Azure.
Great. Thank you so much. I'll share a quick deck. I will not take a lot of time, but just like you said, some people who are joining don't know much about the company. All information I'm sharing is, including this deck, is at wefounder.com/Azure. So, folks, you don't need to take necessarily notes. I'll just provide some narrative behind it. And then I hope to do this in about 5 minutes, and then we can go into discussion, questions, and answers. So I started the company with my co-founder, Russ McGuire, and we started a little bit more than 4 years ago. And the problem we're trying to solve is a housing shortage. 10 million homes short in the US, 1.6 globally. Right here in LA, we've lost 16,000 homes due to fires just 16 months ago that Cheryl talked about. Anybody who's been in real estate and construction knows about chronic cost overruns and time overruns. That's almost second nature in construction. And some 80% of the projects come in either above budget or above the timeline or both. So we're trying to solve that. And finally, on sustainability of construction, it's the third worst polluting industry. It's second only to oil and gas and autos. And so it generates a lot of waste. There is a bad environmental impact, and of course, fire risk that will suffer through. We did $7 million in revenue in 2025 was a 620,000 a positive EBITDA and 62 million pipeline. This 62 million pipeline is really our pipeline for the next 2 years. The way we've achieved it is the fact that we're agile. We basically develop a platform that delivers units in different verticals, from homeless housing to ADUs to units for glamping resorts. Our latest order is a $24 million order with a San Diego developer to do affordable apartments. And then the very high end is rebuilding of homes lost in these fires. And those homes are $1 to $2 million each. Cost, because of automation and robotics we save some 30% on cost. That's average of what's customers saved by using our technology and our method. And speed, that's probably the most important. In the real estate development, timeline for finishing a project or in even home building, timeline is the most critical because when you start, the environment could be different, the buyers could be different, if you especially do for sale or for rent housing, and interest rates can be different. So the fact that you can predict a timeline and instead of taking years and months, you can do it in days and weeks. And I'll share a little bit more about it. This makes a huge, huge difference. We've been very effective with capital. I just came from a session this morning where somebody shared stories of module manufacturers that raised hundreds of millions and billions. We've only raised $7.5 million in capital before. We also have $7.5 million in debt because our factories are smaller. It costs only $5 million to set up a factory. And so with the capital we've raised, we were able to open our LA facility, our initial factory. In the last months in April, we opened similar factory in Denver. Rapid ramp up. It takes a new factory will be cash positive in 6 months and at full capacity in 18 months. That's kind of our formula for opening new factories. And the revenue potential. Every factory can generate $25 million a year in revenue. So now that our LA factory really operates at full capacity, we'll do minimum 25 million next 12 months. But we're hoping that Denver factory will kick in just as fast And so we have some very aggressive projections for the future. In order to buy something from us is a very easy 5-step process. Individuals can go on our configurator and do configuration within 1 hour. But I also sat down with developers for larger projects, and within hour to 2 hours, we can develop the whole kind of a spec for what we want to build. It takes 1 day to create one module. So we have 3 printers here in LA. We have 3 more in Denver. So we can literally do 6 of these modules that are 100 to 200 square feet each every day. It takes 3 to 4 weeks to finish the units, depending. A unit that might just need the electrical might take 1 week. Unit that has electrical, plumbing, bathroom, shower, kitchen might take 4 weeks. Delivery, depending where they're going. Of course, in California, they're all within 1 to 2 days. But we've shipped as far as South Carolina, Georgia, Arkansas, where it takes a little bit longer. But our units are very light, so they're easy to transport. They fit in with their lane, so we don't need extra transport security and all that kind of stuff. So easy to deliver and then easy to install. You see a picture under that step number 5, where we were working on a 62-unit project. It's something we're very proud of. The grand opening is June the 8th in San Luis Obispo. I know people joining us in this webinar from all over the country. But if you are in Central California, mark on your calendar, Monday, June the 8th at 6 p.m., we'll open this 62-unit community in San Luis Obispo. And what you see there is a big crane. We actually manufacture them here in LA. We deliver them to a lot next door to this project. And it took us a total of 4 days to lift them all in place. My business partner is actually in San Luis Obispo there today, and he said, it looks beautiful. We're ready. We're just waiting for the power company to connect the utilities to the site. This is another one of the pictures, just describes total market share. I mean, this is our first unit that was bought by somebody who owns a piece of property in Big Sur, and they bought a unit for $65,000. They rented for $750 a night. So previous picture of San Luis Obispo was project for the homeless. It's called Welcome Home Village. This unit is very much of a luxurious community, but you'll find that with all of our projects, regardless of who the end customer is, design looks pretty. I always said that affordable housing does not need to look ugly. And it's a huge market, $36 billion TAM, total market share. So there is plenty of space for us, as well as many others who are in this market. This is a competitor landscape. We'll list some of the larger modular manufactured housing providers. Clayton, the company that controls about 50% of the market, is privately owned by Warren Buffett, by Berkshire Hathaway. So Mr. Buffett is a very sophisticated investor. The fact that he owns so much capacity in his business is a good sign for all of us. It's a promising business. Champion and Kafka are public companies in this space. Our main competitor is your regular general contractor in this space. And so you see, on one hand, we use more automation, we're more sustainable, but we're clearly not at the type of revenue, in terms of operating efficiency. We're nowhere near to where we need to be. That's what this race is all about, is to really become more efficient, improve our sales processes, continue our R&D, and improve our technology so that we can. Our margins are higher than the industry. In manufactured housing, margins are 22 to 28%. Our margins are in mid-30s, and we're hoping to drive them up to 40%. So this is just statistics. I mentioned it before. 7 million revenue last year, 35% margin last year. Our customer acquisition cost is very low, just 2% of the total cost. And while our total backlog is 62 million, 24 million of that is signed contracts. So it's something we're actively executing as we speak. I talked about us raising 7.5 million before. Of that 7.5 million, 1/3 came from crowdfunding, similar campaigns. This WeFunder campaign that we're doing now is our 6th campaign. So previous 5 campaigns is what they netted. The other 7.4 million is non-dilutive debt from a couple lenders. And our goal is to raise $10 million in this current round. that we're actively procuring. This is a little bit of our roadmap. We got going in 22. We've really gone national, finally this year. That's our goal, is to increase our revenue by 3.5 times by having 2 factories. Go vertical is actually a goal that we were ahead of time. We've been working on this for the last 4 years. In my past, I used to be a multifamily developer where I built 2- and 3-story buildings. And so some of our customers were going to start finishing projects this year are 3-story. And then finally going global. We signed a JV in February, 3 weeks before the Middle East war broke out in Dubai. So that's a little bit on hold, but there is a lot of interest from everywhere around the world for what we do. India, Europe, South America. And so while we're really focused on expanding across US right now, but actually countries like Canada, Australia, where they have their housing shortages per capita are even more severe than in US. So our goal is to be a global company. I've built a global company before, and we're going to try to replicate that in that respect. We have a terrific team. We now have some 40 plus employees. Ross and I are co-founders. Anthea has been with us from the very beginning. She's our CFO. Francisco brings lots of experience in manufacturing. Eli Rogers, our director of technology, he really is both structural engineer and works on our 3D printing technology. And then Jack Thibault joined us about 6 months ago. He was a senior executive at Colorado Office of Economic Development and now leading our national expansion. He's based in Denver. Just this is a summary. Cheryl was super nice. We're talking a lot about me and not as much about the company. Really, I'm just so proud to be part of this team and lead this team because we've been recognized now nationally. For the first 3 years, we couldn't get a single award, not for the lack of applying, but the last 12 months, we received 9 awards. We're just showing off here less than half of them, but National Association of Realtors, we're Innovator of the Year last year. We have a lot of affiliate partnerships with realtors all over the country. They love our product. Fast Company, we've gotten a couple of awards from them. We're one of the 10 most innovative real estate companies in the country. South by Southwest was where it all kind of started. And we were so pleased to go to Austin last spring and be recognized. And then Time Best Inventions was something we received some 6 months ago. I'm going to stop sharing. I think that's kind of a little bit about the company. And Cheryl, I'll let you take it from here. And you were kind of didn't give all of the credit you deserve, but really all these awards and all the publicity we received, the reason we're only spending 2% in our marketing in great respect is to the publicity that Cheryl generates for us. So we've been covered in dozens and dozens of publications, and so many of the customers who come to us, when we find out, how did you find out about us? They can't remember it because they see it on YouTube, they see it on Facebook. So really, you deserve huge credit for our success, and we really appreciate it. I know several other businesses who work with you, and I promote your business as well to people who want to try to get great publicity. And it's very rare to have a CEO of a PR company really take your business to heart and talk about it in many on the plane and on the conference and so on. So much. Thanks so much for hosting this.
Thank you. I will mention anyone attending, please feel free to put any questions that you have as we're proceeding into chat. We'd be happy to try to address any of those as well for you and for everybody watching in the follow-on. But I think it would be fun to just kind of loop around and see for each of the investors present what it was when we got the awareness, what it was that interested us, got us excited, and what were the reasons that each of us invested. And of the 3 of us, Matt, I think you were first. So I would like to hear your story.
Sure. So I was, I think, one of the earliest investors, one of the first. And so when I joined the team, it was not with positive EBITDA or a million awards or all the great work that Cheryl has done to promote the company. It was really based on on a couple things. So I've got the filters that I use for evaluating early stage companies, where I look at the founders and I look at the leadership team, and have they done this before? Do they have the experience to do a repeat? Because I don't want to personally invest in something because it's my money, that is it's the first time for the founder. So that's really something that I look for, like the experience, and the team had that. But the other thing for me is my background, as you mentioned in the intros, is very much on the technology side. And so that is one of the things that you can evaluate early on, is the technology. And I was really, really excited about that. Now, it's never just about the technology, it's about how does that impact the business? How does it really bring the business forward or the product forward? And for me, it was just really a game changer, because it addresses all the things that Gene had a fancy chart on. But for me, I look at the things about efficiency, with the resources. Can we do things more efficiently so there's less waste, so there's less scrap, there's less leakage along the process? Can we do things in a rapid way? And the printing that they have is very fast, and then can it reduce labor costs? So those are the things that I was looking at early on, was to, because is this a technology that can truly be a differentiator? And for me, it was, that plus the leadership team. I was like, yeah, I'd like to go on this ride with them.
That's great. And have you been pleased?
Yes, absolutely. I mean, the the financials are, and the continued growth financially is great. But what I like to see also is the penetration they're having in multiple markets. The fact that they're being able to expand the production into another state. I remember we talked, I believe it was a year and a half ago, about the idea of like having at least one production facility in every time zone. So I think that in the United States, and I think that's something that they're still on track to do. We've got the second one going now, and that's rolling out well. The fact that we're getting both the individual consumers as well as the other um, aspects of the funnel through these larger groups, like we see in San Luis Obispo. So I think that both of those, the individual consumer who may buy something for rentals or for glamping or for a mother-in-law suite, something like that, as well as being able to do this institutionally, I think is going to really help out sales as well. So yes, that's a long way of saying yes. I've been very pleased with their
Yes,
with their
glad you
progress
did
so far.
it. That sounds good. And Jimmy, I'm not sure whether you or I invested first, but I'm going to assume it was you. Maybe it was near the same time, but I'd love to hear your perspective as well.
Yeah, absolutely. Thanks, Cheryl. And I don't know the answer to that either. I think I can tell the story of how I invested,
Yes.
and I think and then a few follow-ons from that proved to be a correct investment. But I met Gene actually at a BA meeting out in Los Angeles, and was so impressed with him after getting some time, hearing his presentation. This goes back several years ago. Hearing his presentation, hearing his experiences, and the market that he was going into is fabulous and seems to be never ending. It's growing and has just a very concentrated group of competitors that are good competitors, which is good for business. It's better to have six good competitors than it is to have 60 also rans, because they can taint the industry. But anyhow, I was at that meeting, and Gene is the other thing that I always do, and I've got a list of other things that we'll try to hit on for the investors here that they would want to consider in any investment they're making, whether, and I think Gene's is a fabulous opportunity, or I wouldn't be sitting here, but the I've got a list of other ones. But I mean, really, at the end of the day, you're betting on the entrepreneur. You're betting on the CEO. And Matt, mentioned that, I think, is his first item. And I've been in and around businesses being grown and capitalized and sold, bought and sold. I've been on both sides of that with many transactions in the M&A side. So I really feel that I can size it up at this point. I've lost money in deals. I've found the more years that I've invested in them, the less I've lost and the more I've made. And I think that's probably consistent with any investor. So a guy like Gene that runs a company the way he runs it and runs his life the way he runs it, and just his general attitude, and that's also, by the way, accompanied by a very formidable partner that has some of the same qualities that Gene has. a lot of the same qualities that Gene has, and they're great partners. They even get along. That's not a given in some
Rarity.
situations. And he's got great backup to Gene. It's not just built on Gene. He's the pioneer that's out there doing it, but he's got redundancy, which is always good. But Gene, when I met Gene, he started telling me about his business. He's just a beast of a business person, and that's what you want in an entrepreneurial organization. And I know that because I've been in them, I've grown them, I've bought them, I've sold them, I've turned them around, I've seen every aspect. And when you find a guy like Gene, you invest in him. He's relentless. He's a bulldog. He never backs down. He literally convinced me to postpone my family ski trip for a day. My family includes a lot of people, and he convinced me to do that because I had to go see his factory the next morning. I don't know why, but I had to see it the next morning, and like it was going away. And that's the relentless bulldog of a CEO entrepreneur that you want to invest in. And he had me there the next day. And when I got back from the ski trip, eventually, I was one of the very first investors. The other thing I'll tell you about my confidence in Gene is that I'm a little bit old school if you haven't noticed, but in addition to what my advisors and accountants and all of them do, I keep a simple scorecard on my investments. I've been fortunate to have a couple of exits, some that I created and some that others like Gene created. So I invest in private deals a fair amount. And I've got a list that, maybe has 12 or 14 deals on it that I'm currently in. And I rate these deals by the amount of money invested, the expected return, the expected time of the return, the expected, when it gets liquid. And then the last category is the probability of success. And that doesn't necessarily mean how much success. It means because sometimes you lose your money when you invest in an earlier stage company. Now, Gene's is no longer early stage, it's proven. But when I invested, it was early stage business. And you are really betting on the man or the lady running that business. And when I filled my sheet out, now I will tell an honest contra to this is that I have some of my probabilities on my investment sheet that have 0% on them. And I was showing that to my grown son one day, who's got a pretty good head for finance and business. And he said, "Dad, why do you have any zeros on your probability investment sheet? Why did you invest in them?" And I said, just don't ever ask that again. There's some things you don't ask your dad. And so, I can say with confidence that even though I had some zeros on there, since day one, I had a 100% on Azure because I just believe that strongly in the market, the conditions, the leader, the competition, and the competition. These guys, great competition, by the way, because they're the ones that are going to ring the bell for us and cash our checks because they're going to buy them for a huge multiple one day. So the competition's set up great for that. Everything's just perfect. So I've got that at 100%. There's only two companies out of my 12 or 14 I have at 100%. Gene's was in there the first day I bought in, and it's still there today, and it'll be there until we cash that big check. So I'll
Well,
turn it,
Jimmy, thank you so much. Thanks, Matt and Cheryl. What's been your perspective?
Well, I've had an interesting perch because working with Gene since 2024 on the public relations, I hear the press's reaction firsthand. And it's been highly interesting that as much as Gene is generous to give me credit, the business proposition is a good one. It's really captured interest. But what I've had the opportunity to observe over time is that it's different reporters and for different reasons as the company progresses. That initially it was the coolness factor. The fact that this is sustainable, that there are renewable resources being used, all of these things combine to make it just have a wow factor. It was not a year ago. It was actually, I think, last summer. I made sure that my husband was in the room while Gene presented. I was impressed enough that I was we've got to do this. We've got to get into this. Made sure my husband heard the presentation. Well, after the presentation, yes, he was impressed, but fortuitously, I got word that my retirement annuity had matured, allowing me to move it. And that poor financial advisor, this was not the outcome I'm sure he was hoping for at all. But what I did was choose then to remove it and invested a portion of that in Azure. Well, of course, that has tax consequences. But in looking at just the increase in valuation from that time to now, my husband is no longer complaining about that. He did
Great.
itemize our deductions quite carefully this year. He made it a full-time job for a little while, but no longer complaining. And not only that, he actually is taking an active role in helping to expand Azure in Alaska.
Yeah.
Wow,
And
that's
just,
outstanding.
yeah, the
You know,
due
I want to.
diligence he's done there, the communities who can benefit from this, it's just stunning.
It is, yeah, just to punctuate something there, Cheryl, that I didn't mention. That for if there's any early investors on here, depending on how many deals you've looked at, you probably don't have the thing scream off the page that I do, and the fact that he did $7 million, I think, in the last reporting cycle in gross revenue, and there's 65 million in the pipeline. Obviously, what you typically worry about with with an early stage company is, yeah, you had a good year, or yeah, you had two good years.
Yeah.
But in this case, he's got my gosh, if he doesn't sell anything else, he's got 6 years left of revenue. Who can say that? That's just a mind-boggling number that he's got 6 years worth of business sitting there, and the fact that they're profitable, and it's rare to get in on the early stages of a company like this that can
Yeah.
say they're profitable. They all can show you projections that are profitable and what if scenarios that are profitable, but it's rare that they can sit and show you that it's a profitable company today. And oh, by the way, we've got enough revenue to last us 5 years if we don't sell anything else.
Yeah.
I think that's actually a great testament to the leadership of this company as well, to say that we're not going to take on hundreds of millions of dollars of VC debt just so we can try to go fast. So you can be
Right.
very efficient with the resources that you have and push yourself. Push yourself to get to the point of being cash flow positive, to being profitable, to have a positive EBITDA,
Right.
early on in the growth in the trajectory of the company. And I think that's really, really smart, because as soon as you have that, as soon as you have positive cash flow, positive EBITDA, you control your destiny.
Yeah.
That is such an important thing. I've been in startups that have done very well. I've been in startups that have not done so well. And when you control your destiny through positive cash flow, then that is just a great place to be as a company. It's been interesting for me because I was one of the early investors to see this go from a speculative investment, to basically a growth stage investment now. So for the folks that are on this call, you need to invent the time machine if you want to catch this as at an early speculative time, because now this is a growth stage company and you're investing in growth for the future, and with the risks mitigated, like Jimmy was just saying there, that when you have that much backlog for a business like this is absolutely critical. When you have that much backlog, it's such an enabling thing for the security of the business.
Well, I will underscore that as well by noting that Gene is one of the most careful and frugal CEOs that I have worked with. That as a vendor, and especially when doing public relations, we can always find more opportunities and be, oh, should we do this? Could we do that? And he's been incredibly careful. Well, as a vendor, you might wish for more budget, but as an investor, I'm thanking him now that we've reached this point that I see the wisdom, and it's paying off well.
Yeah, well, Cheryl, I think that's a strategy we developed kind of mutually. It's like, so many companies want to, get pay to play,
Yeah.
pay this much to have opportunity, and we wait very carefully. And we prefer not to pay. The majority of those opportunities I showed just before didn't require payment. It is, if we can win it on a just
On
yeah,
merit.
it's longer, it takes longer, and it's harder, and it's much more competitive. But we rejected just this morning, I think, two opportunities that seem like great things, but they cost money, and why should we pay it?
Yeah.
And
Can earn it.
even going after the business, actually, it's really finding opportunities with people that can be our long-term customers. So Matt introduced me actually to somebody. I don't think he knows about this yet, but he introduced me to somebody just has cool technology in defense industry, and that person is a real estate developer, and this $24 million contract we're talking about in San Diego is from that gentleman Matt you introduced me to, and it was like, it seemed like it's we actually I asked Matt to meet with me in San Diego to meet with this gentleman, and sometimes these opportunities don't come, especially in the startup. Like it's hard for me to sell to big customers. So I my preference is to work with small, medium businesses. They can make quick decisions. I can understand how they function. Um, but now once you get track record, now you have more comfort. You have more references to go and sell to bigger businesses. The same thing with the state and local governments. We for the first 3 years, we wrote plenty of contracts, plenty of RFPs. We couldn't get a foot in the door. But now we utilize AI to find grants that match our capabilities and to put our proposal, of course, references. And now we have, we won the San Luis Obispo and the Camarillo contracts. They're exceeding about $6 million. But just in the last couple of weeks, we've submitted bids on some 60 million in addition to our pipeline. Now, the reason I'm so now focused on raising capital, because there comes a point where you really cannot be bidding on things that you can't deliver, right? So that's why we're so focused right now to raise the capital, to expand, to have capacity to enroll, because we now have plenty of technology. We don't need any more 3D printers, but we now need more, maybe a larger warehouse where we can finish these units in both California and Colorado. So we now need to, it requires less money for equipment, but more money for kind of our infrastructure. The whole process from sales to customer service to manufacturing. Just before this call, we're looking at, again, with larger orders, we want to reduce costs because I would love to show higher margins. So now is the time for us to really raise capital to have as efficient operation as possible. We're also talking about some debt. Again, like working capital, you should be able to borrow money for this. It's adding new technologies. We're continuing to experiment. We're 4 years. We're in the fourth material formula because by improving our formulation, we can accelerate the production time. By having quicker designs, we're using AI for somebody can just email us their address and we can determine within minutes of what can be built on the dimensions. So a lot of those things kind of they're the venture type investments. It's investment in trying to improve the margins, better serve customers, having less people on our team who are necessarily involved in sales. We have right now, I mean, for a long time it was just my business partner and I who are main salespeople, but we now have two very capable people. And on Thursday of this week, so just the day after tomorrow, we are bringing a team, one of the largest dealers of manufactured housing. They have 100 salespeople. We pretty much have we can't announce the agreement yet, but I'm pretty confident they will be bringing 8 of their office managers here if we wouldn't be signing the agreement before this training starts. So now it's been taking me from day one when we started manufacturing. I said, well, wouldn't it be nice to find a dealer or somebody who can sell our stuff? But a lot of the dealers are selling for those 3 other companies I've mentioned, my competitor side. They're afraid to start selling something if the manufacturer can't deliver. In this instance, it was the Manufacturing Industry Association who introduced us to this dealer. They felt that they're the most innovative, one of the largest in California, and it just in itself to increase our sales force from 2 to 102. Again, I better be ready. I mean, that's the question that the CEO of that company constantly asks me. So, Gene, are you really ready? So on one hand, I have to sound very confident that I'm ready, but on the other hand, that makes me work,
Yeah.
18 hours a day and be on the
I've
clock.
heard it said if you don't lose your lunch over pure stress at least once a week, you're not a true entrepreneur.
Yeah, I am not stressed. I cause stress. At least that's what my team tells me. But it's been while this is my fourth startup, I've never been this excited because in previous companies, in every instance, I built something and then I started selling it. I mean, it was just every time, and that's kind of how start. You kind of have an idea, you build something, then you try to sell it. What's different in Azure is when we printed our first prototype, we just put it on Facebook because we thought it would be cool for a backyard studio. This was during COVID, right? When people needed extra space to work from. And our first customer said, I want for glamping. I had to put my iPhone under the conference table to see what glamping means. And that's what I love. I love the fact that we've produced something that's very attractive from design standpoint, from sustainability standpoint, and people have other ideas. Another thing is, many times advice even I give to young entrepreneurs, find a niche and go very deep, go narrow and deep. Looking at all the verticals we sell to, maybe I don't, I don't necessarily belong to that, but I really think that in real estate, you have to be adaptable. When interest rates are high, you got to sell to the governments. When there is COVID, you have to sell for backyard studios. When COVID is over, you need to sell ADUs. So we really kind of think of it as a platform. We've developed a methodology to produce a housing unit. And the reality is it can be used, a smaller version of it can be used for the homeless. And it was, smaller, no window, maybe smaller windows, not as good finishes. But we can also build a 2,200 square feet home in Malibu. It'll still consist of, 11 of these 200 square feet modules, but they will have, marble countertops and beautiful floors. And in that instance, we will actually install drywall on site instead of doing it in the factory. So we can customize a little bit. But the goal is for this couple of homes, we finally got permits for one home in Altadena, one in Malibu to rebuild and starting construction this week. And
It's going to be fun.
again, my goal was never to win architectural awards, but I think we're going to win some architectural awards because these homes look beautiful and nobody will be able to say where it was built. I mean, today at the session we had this morning, people were talking about concern that, in the subdivision in Malibu where we're building this house, there are 300 homes that were lost to fires.
Yeah.
Can you imagine the logistics of having 20 contractors for 300 homes all showing up on Monday morning and leaving them? I mean, it's just going to be a traffic jam. So much more efficient to make them right here in the factory and just deliver the modules to the site when they're all finished, install them in a couple of days. I mean, contractors are complaining about their tools being stolen. The guy's not showing up because traffic, there was a fire not far away in the area again. There are all kinds of excuses when you do it on site. When you do it in the factory, and another thing is young people don't necessarily like to go in construction anymore because you need to have dependable transportation to go to different sites. You have to be ready to work when it's too hot or too cold. It could be raining. You don't know whether your company has a job. Young people love working here in the factory. They know that they come to the same place. Several of them commute together. They come. It's always climate controlled. So yet many other reasons why this is an attractive place to work, and people are very proud of what we're doing here.
Well, on this point, I'd love to, we've got a couple of questions that I want to make certain that we cover. This is a really good one from Greg Benson. On the WeFunder point, what is the main motivation for having used this platform so far to find investment as opposed to the more traditional or institutional channels?
Yeah. If you were to ask me 5 years ago, before I started the business, where I'll go was crowdfunding platform, I would say, what is it? I have no idea what it is, right? But the reality is raising money from, and Matt referred to this, raising money from venture funds is very, very difficult. I've done that in my previous business. And the reality, when you have a venture fund who sits on your board, in that instance, they controlled our board, we were forced to make some decisions that we really didn't care for. and so on one hand, it was easy to just get one big check. On the other hand, they forced us to do a merger deal, to buy somebody on terms that we would never accept. So it made sense to go to the crowd, and just you cannot imagine how many benefits we got from being crowdfunding. We have one investor who invested $500. He introduced us to his dad and his brother, who invested over $500,000, and they provide leasing financing for a lot of our vendors. Stories go on. Matt invested, introduced us to the biggest customer. Jimmy, again, I was Jimmy just last week. BA is an incredible organization. I've been in that group for 5 quarters, so 1 year and 3 months, and I make a little pitch every quarter. And for the first 4, Jimmy invested. Yeah, we have a couple other investors.
And I invested.
But but from this one, we have somebody who came up to me. He wants to buy 200 units, and he's expecting a letter of intent from me today. He just heard, it finally clicked. And then we have another investor who actually brings his kids to these meetings, and the daughter, she looks like she's 12, but she's actually 22 or 23. She said, I told my dad to work with you, and they have multiple opportunities. So it's investors who often opportunity for me who are not even, you don't even expect it, but it's either introductions or other folks who invest. So it really has paid off. It's been, and now I go to any city in America. I'm going to be in Raleigh next week. One of the biggest supporters of ours is in Durham. I'm going to have coffee with her in the morning on Thursday morning. I'm going to New York the next day. I'm going to have drink. Last time I was in New York, I had 6 people who never met each other, and I've never met in person, but I sent out an email. So just from networking for customers and for other investors has been incredible opportunity.
Well, I guess one of the things about crowdfunding, difficult as it may be in some respects, you are really, really literally listening to your customers from day of inception.
Yeah.
And you are not owned by an outside party who might, for the sake of their fund, roll you up at an inopportune time and on terrible terms.
Yeah. I think that that's really important. And by the way, the folks that we don't know, that I don't know on here, if you want to see where Gene's working and the environments he works in, you could go to the letters B as in boy, A, invite, INVITE.com. And that'll show you a short video there, about 4 minutes, and it'll show you the environments that Gene goes to work to build his business, because I watched him fly corner to corner across and through the United States, and he just never sleeps. I met him one morning in Miami, and he'd left Alaska a day and a half before that. And I said, "Did you sleep?" He said, "Well, of course I slept. If I can't sleep on airplanes, I'd never get any." So he's but then back to the pure investment here with the folks that are on. One of the things that you should be asking yourself is, when's payday coming, right? I mean, it's no different than if you have a job. We got to know when we're getting paid. So nobody can ever predict that in these exact situations. We have ideas and we have plans, but the main thing that I think Gene stands out, because I've done a fair amount of this investing, is you can also get an investor that decides, once he's become success, or an entrepreneur that's become successful, they can also decide, instead of selling it and making all their investors rich, to cause it to be a tribute to themselves. And with young entrepreneurs, you especially can run that trap where they've made it, it's all good. Now, instead of giving everybody a 20x return on their investment or a 50x return, well, maybe I can get the biggest exit that anybody's ever had in this industry. It'll just take another 6 years. And I don't know about you, but I miss my money when it gets gone too long. And I like to have it come back and hang out at home for a few minutes before I put it somewhere else. And I think most investors are like that. So the thing about Gene is, he mentioned a few minutes ago, that he's sold several of his companies that he started up just like this. So he's not, he's passionate about his business, but I think he'll also be able to sell it fairly soon to one of these much larger companies that are looking to roll that up. And so to me, that creates a quicker return on your money.
Oh, Gene, talk to us about the clean energy credits too.
Yeah, I mean, quite honestly, Cheryl, we haven't taken advantage of them yet, but there are opportunities everywhere, both here in this country and in many locations overseas where people like the clean energy credits, and then there's tax credits. Big beautiful bill that was passed last July has a provision in there that drove like sales late last year, and we're now seeing again this year. So basically, what this new tax bill allows investors who buy units for short-term rentals to write off that investment in 1 year. So an example is like that unit I showed you that's in Big Sur. Somebody buys a unit like this, say for $70,000, they can put as little as 10 or 20% down, finance a balance, and write off $70,000 in the year of purchase. So the investor, one of the people that was at BA meeting, that was Jimmy. He is a developer, but he knows people who are tax advisors, and what a great opportunity to buy units, have developer place them in units so they can be on short-term rentals, so it can generate immediate write-off, 5 or 7 times your investment, and then generate cash flow because there is, when they're renting on short-term rental. So that's yet another thing that's driving this business, and I honestly think that our Colorado factory will just be making those units for the rest of the year if this deal comes through.
Well, speaking of the next factory, where might the next one be, and would it be what time zone?
Yeah. Well, as Matt mentioned, the vision was always to have one factory in every time zone, but we're now very intentional. What we're now saying is we really want to replicate some parts of Colorado. In Colorado example, state of Colorado provided 78% of the funding. So it costs us about $5 million to start a factory. They provided one of the loans, and it's at 1.5%, 20-year amortization. They provide majority of funding to bring there. But what we should have done is also demand that we have a $25 million. We want to have a year of production pre-sold before we open. We couldn't command that because we kind of theoretically knew how quickly we can open the factory, but we now have proven that we can, from the day we sign the lease on the facility to the opening date, we can do it in 4 months. Now that we can do that, we can be much more intentional about getting enough order. So the areas that make sense are Midwest and East Coast. While a lot of demand comes from Texas and Florida, we're actually more interested to be in more northern states because there's a huge cost advantage doing it in the factory, say in the factory in Ohio or in Illinois, than on site, because so much of part of the year it's too cold to build, or it's snow, you can build in the factory. The same thing on the East Coast. There are states in New York and Massachusetts and Maryland that have very large, shortages of housing, and the cost is very expensive. So I really think that we will do better being not necessarily in high growth states like Texas and Florida, but being in states even a little bit further north, like North Carolina or Maryland or Ohio's and Illinois possibly. But we're not there yet. Right now, our first goal, actually people are calling me from all over the place. And I said, call me around the end of the year. Right now, our goal is to have fully functioning these 2 factories we have now that are producing, I love that here when it was the end of the year last year when we worked, the robots worked 24 hours a day, but we had 2 full shifts. And that's, until we, so now our Colorado factory is a little bit lower cost because we didn't, our rent is lower, our payroll is lower, and of course, state provided funding that's very inexpensive. So we have a lower cost. We're shifting all production out of California to our Colorado facility. And the next one is not going to happen this year. It's probably going to be in 27. And the conditions need to be that either state or local government have to provide most of the funding, if not all of the funding. And there needs to be secure, firm orders so that when we can open at full capacity. That's what's gonna make us successful.
Because we're getting close to the end of the hour, can you tell us now, Gene, where would people go to get a copy of the deck or to ask follow-up questions if they need to sign off before we
Yeah.
can get their question answered?
WeFunder.com/Azure. There's a deck there. There's all our financials are there, and they can ask questions on that site. I look at them every day and respond. So WeFunder.com/Azure.
Under.com. Okay. And of course, we'll have this taped as well. But are there any closing words that you would like to offer in terms of the ideal moment for investors to think about investing? What should they know about where we stand right now?
Well, this is a unique opportunity because we're still, while we've made huge progress, it still is a great opportunity because our offering is going to close on June 30th. So we only have about 6 weeks to go. And while raising money from crowdfunding has been fun, it's been very productive. Look, could be a family office or somebody who can write a bigger check, not necessarily VC mentality, but maybe even a VC or a family office. So I don't know whether we're going to have another opportunity for individual investors to come in and be part
Got
of
it.
this. So I really think next 6 weeks is the perfect time to do it. I'd love to hear, from Matt and from Jimmy, some of their words of wisdom, how people should look at this.
Yeah, so a lot of the folks that follow my writing and my programs and so forth, the stuff that we're doing, they're not entrepreneurs themselves. They're working in corporations, and they're engineers and directors and supply chain and marketing and sales, all those sort of things, working in a corporation. I think this is a really good opportunity to look at something to help diversify your portfolio. Remember, one of the things we talk about a lot in my programs is to take back control of your financial independence, take back control of your financial strategy. And this is a great opportunity for decorrelation from the public equity markets, a great opportunity for diversification, a great opportunity for, I believe, still a major upside in this company. What do they say often? The two best times to plant a tree are 20 years ago. It's the first best time, and then the second best time is today. Well, you're not going to get at a lower valuation than you will today for this company. I firmly predict that this valuation will only continue to rise, and it's a great way to obviously do your diligence, 100% do your diligence, but the great way to diversify some of your portfolio out of public equities.
Jimmy, what
So
are your thoughts?
yeah, and in the interest of time, if you want to learn about me, you can go to jimmyralph.com, jimmyralph.com. That'll show you my background. And what that'll show you is that I've been in, around, owned, sold, bought, operated, turned around dozens and dozens of businesses in my career. And so I understand a thing or two about a thing or two when it comes to investing. And what I invested in was an early stage company with Gene. You all have the opportunity to invest in a very mature early stage or really a mid stage company that's already proven the EBITDA is there, the business is there, and that they can execute it. That's all you care about. And they're going to sell it for a big multiple one day. So if you put some validity to the dozens and dozens of deals I've been around, this one's 100%, in my opinion, secure on my sheet that I keep track of for myself. And what else can I say? So.
Thank you, guys.
Yeah. Well, and I'll add to that, as a small business owner, I've been through all kinds of business climates. It's not a traditionally friendly environment right now. And as an outcome for my business, rather than hoping to sell, having equity in the sharpest companies I see, and we see a lot of them, it's a business strategy for us. It's one that's important and that really plays on my family's future. So I'm very, very pleased and thrilled at the opportunity to do this.
Cheryl, thank you so much. Matt and Jimmy, you've been great supporters and friends, and really appreciate it. And I look forward to seeing all of you soon again. Thank you for your time.
Sounds
Thanks,
good.
Thanks,
everybody.
everybody.
All right, bye-bye.
Congrats,
Very good.
Gene.
Thank you.